Hey everyone, if you are wanting to know anything about short-term rentals, vacation homes, then I've got your guy. I've got the expert, Mr. Shawn Moore from Odyssey. Shawn, thanks for joining me today.
Absolutely, Jeff. Really excited to chat with you today.
Yeah, and I've we chatted a little bit before we started recording this, and you and I spoke about a year and a half ago about some stuff, but now that I've gotten more heavily into the short-term rental space, I said, man, I got to reach back out because this guy is the man. So for those of for those out there that don't know much about Vodacy and Shawn Moore, tell us a little bit about how you got started. I know you started doing fix and flips in real estate,
Yeah,
and maybe
I've
how
been
that transitioned into short-term rentals.
yeah, it's been I've been around the block a little bit in the real estate game. I've been full-time real estate investing, never had a job in the last 22 years. So we're going on 23 years full-time real estate investing. Started off in wholesaling when I didn't have a lot of money. And then rolled that into actual fix and flip for a number of years, and started doing a lot of development deals and long-term rentals, and just kind of making my way through different asset classes. And in 2006, we really got introduced to the resort vacation home world. It was, albeit it was at the very high end, we were actually introduced to like really high end resort properties, and started getting involved in a development deal with really high end resort developer, private ski golf resorts. Like these are like 25, $30 million homes. So really, really exclusive high end properties.
Oh,
And that we were doing that. Everything was really fun. My wife and I together were doing that. And one day the feds showed up, and the office computers got seized, and the file cabinets got locked down and taken out. And we're all kind of wide eyed and looking around, wondering what the heck happened. And the owners and developers of that resort got indicted on securities charges. And that really kind of shut that world down for us.
wow.
And at the time, this happened in late 2008, 2009. So we were kind of in that world for about 3 years. And at the time we looked around, and we had already, even though I'd been a long time investor, most of my investments were really not investments. An old boy, George was his name, at a real estate investment club meeting, a local one. He put his arm around me when I bragged when I was in my 20s that I was this hot shot investor. He said, "Shawn, you're not an investor." He said, you have a job buying and fixing up and selling homes, right? Because most of that it didn't create any long-term passive income. We got paychecks all the time. Same with our development deals. We got these big paychecks. I did build up a portfolio of some long-term rentals, but when we started doing this high-end resort stuff, we sold all of them. One of the biggest mistakes I ever made. We had about 52 long-term rentals at the time, and sold them all. Thought I was a genius when everything started going down and tanking, right? And I had nothing to do with that. I just had to do with we didn't want to do it anymore. And so in 2009, though, the real estate markets were not great to dive into, and we were really kind of looking around, starting over at a time when a lot of realtors were, or real estate, the entire real estate industry, whether you're a builder, whether you're a contractor, whether you're a developer, everybody was kind of struggling back then. And we were looking around like, what in the heck are we going to do? And we actually lost everything. I sat around way too long. I looked around and blamed everybody. I played the victim for way too long, didn't take any responsibility, and didn't get back on the horse and start running. And finally lost our house, lost our vehicle, and decided we were going to get back into selling some real estate. And we started hustling and getting back into real estate. I knew investors, so I started working with investors again, and helping them build portfolios of good deals. Back then there was a lot of things on sale back in 2009, 10, 11. And through that time, though, my wife and I had a cabin. We had a vacation home that was not a short-term rental. It was just a vacation home that we had bought and we owned. And at the time, out of necessity, we started renting that out. We started losing everything else. And we started to realize in 2006, 7, 8, 9, 10, this property was producing, and the revenue just kept going up when everything else in real estate was going down. The value of the property was going down. But that's when we started to realize, man, maybe there's something to this short-term rental game way before it was popular like it is now. And that's really what started to open our eyes to it. And by a few more years went by, we had a little bit more money in our pockets, and some life changes happened, and said, hey, I want to I want to revisit that again. And that was back in 2012, 13, 14. And we really started building what we have now. And we got full on into short-term rentals. So we've been in short-term rentals for almost 16 years. And back in 2019, we had enough people asking us to help them. And so we started Odyssey, and that's what it is. And now we're the largest vacation rental education company that I'm aware of in the world. I mean, we've got almost 2,000 paid members in a high-end mastermind group. We've got almost a 1,500 property collective portfolio, and having a lot of fun. So yeah, it's been a wild ride and a really fun asset class that we've seen a lot of changes and a lot of growth and a lot of maturity in over the years. And we're seeing another shift as we go into some of the markets that we're looking at right now.
Yeah, I was telling you a little bit before we started recording, I was speaking to a dentist this morning about short-term rentals. And his question was, well, Jeff, I'm hearing all this negativity in the news, and Airbnbs are going down. It's not what it used to be. So what do you say about that?
Yeah, well, one, I would say that the negativity in the news is not exclusive to Airbnbs and short-term rentals, right? Pretty much that's what they sell is negativity. Yeah. So is the market shifting? Absolutely. But you have to look at a lot of different things, right? If a reporter is reporting on one thing, it doesn't tell you the whole story. And I would challenge everybody to look at the whole story with short-term rentals. Almost exclusively, more money is being spent today than there was yesterday. The markets, the total revenue and dollars being spent on short-term rentals as a preferred accommodation, it just continues to go up. We're seeing year-over-year growth in every single market. Almost any market you look at, you're going to see revenue growth.
Did you see that? Did you kind of see more of a spike after the pandemic? So people didn't want to maybe stay in hotels and.
Yeah. So we saw the pandemic, we saw a spike, and we saw a huge spike in occupancy. So we saw where you really saw a big spike after the pandemic was occupancy rates. Like people were operating short-term rentals 80, 90% occupancy for a couple of years. That's not normal in this game. A normal short-term rental, I mean, if you're above 70% occupancy, that's a really high occupancy rental. Right? Your prices are probably too high, or you've got something going on in the market that is not going to last like the pandemic, right? We had this never-ending summer. Lots of people were like wanting to get away. What we didn't see a spike in, interestingly, was we saw revenue has been going up, but the revenue's been on a more steady climb than the spike that we saw where occupancy did. And nightly rates haven't really, they've been on a bit of a steady, more of a natural climb that you would anticipate, where you didn't see these big spikes. And so overall revenue did go up, but it was a factor of occupancy. And for us, we run the ownership model where we buy these properties, own them for the long term. So we have to look at historic occupancy. We never underwrite deals at 80 or 90% occupancy. It's not sustainable in a game that you're going to have checkouts, ins and outs, and you're going to have these lag days. You're not going to operate at that high of occupancy. So what you see a lot being reported is these huge drops in occupancy. So you are seeing drops in occupancy and seasonality coming back into the markets, which is a factor of your overall revenue, but it's not the only factor, right? You have nightly rates. You have how much money is being spent in your market. So how can you go get your unfair share of that business, making sure there's actually demand out there, right? The money in this market, in really any game, is made in the top 20% of the market. It's the 80-20 rule. The majority of the money is made at the top 20% of the market. So you have to figure out, how are you going to operate in the top of the market? Unlike a long-term rental that maybe you and I have a property in the same area, same bed, same bath, basically the same property. The market's going to dictate our long-term rents pretty much. In short-term rentals, that's not the case. There's a wide revenue range, and you want to make sure that you can operate toward that top 20%. When you start to look at that, the future looks really, really bright, because there's a lot of money being spent in this market right now. And so the key, though, is understanding that this is a really mainstream asset class with a lot of moving parts and a lot of different factors that you need to look at. So is it true occupancy has dropped? Absolutely. Was it normal that it dropped? Absolutely. It was not sustainable. I mean, having a short-term rental the last 2 or 3 years was like having toilet paper during COVID, right? It was, if you had one, it was renting.
Yeah.
That doesn't mean the golden age is gone. What happened is this asset had to grow up and mature really, really fast, because this last year we've seen a lot of regulations get put in place. There's a lot of different areas that say, hey, we like them here, we don't like them here. Here's how you're going to operate. Those are all really good things long-term for the industry. It's not, because they're saying, well, everybody's telling me I can't do it anymore. You can't go put a 7-Eleven on any corner that you want either. And, you can't go build an apartment complex wherever you want to. There's zoning in place. There's, so municipalities are starting to say, okay, we're going to recognize this as an actual asset class that we have to recognize and say, where do we want them? How's the zoning? What is the licensing? What does the permitting all look like, so that it fits in well with our overall master plan in the community? And that's a good thing. That's not a bad thing. And I think that some of the reporting that you hear that you reference or maybe some of the regulations, maybe drops in occupancy for a lot of people. Is that true? Absolutely. But is it also true that there's more money being spent than ever in this game, and you got to figure out how to go get your unfair share of that business?
I think what really opened my eyes, being from Louisiana, LSU Football really popular, and they bought a house in Baton Rouge, fairly close to the stadium. But they had, it was like a long-term rental, maybe $1,700 a month, and then they decided to Airbnb it, and they said, man, when you couple the fact that there's always, concerts and stuff going on and business stuff going on, because the hotel market in Baton Rouge is not good at all, the variety. But during the games, basketball games, football games, that sort of thing, they were 5, sometimes 10xing their revenue. If you average it out. And they're like, man, this is crazy. The value, you buy a $200,000-$300,000 house, instead of getting $1,500, $2,000, you may be getting, $6,000 to $10,000 or more a month if you could, do it like that. So that's what really opened my eyes to this market. Is that kind of what you're talking about?
Absolutely. And it's a great example of a market that is not, on the beach or on the ski hill, right? There's a lot of these markets. In fact, college town markets, lots of people say, what are the best locations? Go look at some of your smaller college towns. They don't have really good hotel options. Mm-hmm. And even some large colleges don't. Like, they're in areas where, like you mentioned, that the hotel options aren't great. One of our members inside of our mastermind group played on the national championship team. I think it was 88 for the Fighting Irish in Notre Dame. And they have a property there. They set it up there. The amount of money they make during the football season it's almost 3x just during the football season of what they would get as a long-term rental. And then they've got graduations, and they've got all kinds of other things in South Bend that are going on throughout the year that they rented out. And a lot of those smaller markets are, you're not spending $1 million for a beach home to be able to do this. A lot of times you can go invest $200,000 or $300,000 in some of these college town markets, and the revenue that you can make on them is crazy. As long as and you want to make sure that you've got a unique experience, you've got a great property, and it's all set up correctly. But it doesn't have to be, the $1 million property on the beach or on the ski hill, which, those work as well. But that's what I think everybody thinks about is these vacation markets. There's a lot. One of my members is a traveling nurse, and he buys properties around major medical centers, and he uses them and then rents them out to other traveling nurses as well. And it works out beautifully for him. I mean, it's really profitable.
Yeah, that's a great idea. So look, most of my groups are physicians and dentists and other high income professionals. Revenue's great, passive income's great, but talk about some of the tax benefits that are out there to help us. Would we be able to affect our active, our active income at all? Do anything with our taxes?
Yeah. It's one of the the biggest kind of hidden secrets, as I call it, in the short-term rental game is a lot of people assume if you're going to be able to cost segregate, bonus depreciated property and really write that off, you have to be a real estate professional.
Mm-hmm.
Well, short-term rentals, there's a loophole that if your average lease length is less than 7 days, you can materially participate in that property. And there's criteria to do so, but it's especially the year you buy it, it's not that difficult to be able to qualify for material participation. And then what you do is you have that benefit of going and doing a full cost segregation on your property. You bonus depreciate it, and you work in this high income job as an active, whatever your active role is, and you're paying a lot in taxes. Well, now you can take those losses from that bonus depreciation and write them off against any of your other active income. That's huge, because normally you can always depreciate, but you're writing off any losses on a passive investment has to be written off against passive income. Well, when you can take a short-term rental and write those losses off against active income, that is huge. And especially when you bonus depreciate it. The property I just bought is that I just got done doing, it was $900,000 acquisition. It was $800,000 acquisition. We put about $100,000 in furniture in it. So we were able to capitalize that as well. And I put $200,000 down on the property. We bonus depreciated it. We did all of our cost seg, and I was able to get a write-off of $360,000. So that write-off of $360,000 is going to reduce my tax liability on that for this year of almost $165,000. Wow. So my net into that property is, I'm up $45,000 net into that property plus my furnishings. And this property is going to generate somewhere around $105,000 a year. We're going to have 100% return on our investment in about 4 or 5 months. That's because of that tax loophole. That's because we were able to do that and write it off against active income. So high income earners and professionals that are paying a lot of taxes. Now, it doesn't work. You don't get a refund, right? This is not a refund. So some people have asked me, well, I'm only paying $30,000 in taxes. That's what you'll save. You'll save and you can write that loss forward, right? So you can continue to take that. But if you're paying taxes, it's a great way to be able to basically, Uncle Sam, help fund your portfolio, because all I'm going to do is take that and parlay it into the next property. So that same $200,000, if I'm able to recapitalize or recapture 65 or 70% of that every time I do this on each of these properties, that's huge.
And on the flip side, there are some people, like we had dinner not that long ago with my wife's cousin. Her husband's an ER doctor. They live in a little, kind of a small town in Louisiana, and they've got, I don't know how many they have, maybe 5, 6, 7 homes that they're, I think they got some long-term rentals, but then they're getting ready to start doing short-term, turning them into short-term rentals. And we were having dinner, and I said, hey, look, I just wrote this article about what you just talked about, short-term rental loophole. And he said, why isn't my accountant told me anything about it? And he was just, and then he went to him, and, he did explain it to him and all that. And he was really excited now that he's got that loophole to bring his ER doctor income. If somebody's making $400,000 a year and you can bring that down to $300,000 a year, well, you're only taxed on the 300 versus the 400.
Exactly. It's huge. And to, like, not to pick on the CPAs out there, the tax code is what, 5,000 plus pages long. For them to understand every single loophole, and this is uncommon for a lot of, they haven't dealt with this. So a lot of them don't know about it. And a lot of times when they look into it, I've heard the kind of a really kind of knee-jerk response from CPAs saying, "Oh, that only works if you're a real estate professional," and that's why it's the loophole for short-term rentals, not just across the board in real estate, because it has to have an average lease length of less than 7 days. And so that's one of the criteria that allows you to materially participate in that business as an active trader business. That's really what you're doing. And then that's why it allows you to write it off against active income. So a lot of CPAs aren't going to know about it. And so don't be upset with your CPA. A lot of, it's something that's not as commonly used. And you want to make sure that you work with a CPA that understands that. But it can be a huge, huge advantage if you're paying a lot of money on active income.
So tell us a little bit about Odyssey and how you help people with short-term rentals.
Yeah, we love to help people dive into really figuring out this game from A to Z. And there's three major phases in this game. You really need to have the acquisition dialed in, understanding where you're buying, why you're buying, what it's going to generate income wise. You really need to understand that underwriting process. So we help people go through the acquisition phase, that setup and management phase. Most of our clients, they don't want a side hustle. They don't want a second job. They're higher income earners as well. They have the ability to buy properties, but they don't want to set them up and manage them. So we have to find properties that underwrite well for that and can handle full service management, and then ultimately marketed to stand out and be able to not get lost in the crowd. These markets are getting more and more saturated, and a lot of people are just getting lost in the crowd. Like I said before, the money being spent is large and continues to grow overall, but the money is made at the top 20% of that market. So once you buy the right property in the right location that's set up correctly and then marketed to be able to be recognized and operate in the top 20%. That's what we do at Odyssey. Our goal is to help people build portfolios of vacation rentals, to build lifestyle and financial freedom, and operate in that top 20% so they can really accelerate that progress. And we do that with a mentoring program. We've got a step-by-step process, and we have a mentoring program. It's all by invitation only. So if people are really interested and wanting to learn more about it, they can just go to odyssey.com. I've got our podcast and a YouTube channel. They can learn a lot. There's a lot of free information on there. And if it's something that resonates with you, obviously they'll find ways to get a hold of us on odyssey.com.
Now, is that separate from the mastermind you were talking about earlier, or is it the same thing?
No, it's all the same. So we've got what we do at Odyssey. Everything's kind of once we work together, everything's all inclusive, and it includes a master class, which is a course like Blueprint, a mastermind group, and then the coaching that's kind of all rolled into one.
So you would, if somebody didn't have a clue about where to start a real estate, so your Odyssey would help them, like you said, the first step is acquiring the property. So y'all would help them kind of figure out the area, acquire, walk them through. And
absolutely. We're going to look at how much capital do they have, what their goals are, what markets make sense based on the capital, what their property goals are, all those different things, start to finish, really helping them. And I've got a book on Amazon called What the Hell is a Lifestyle Asset? But it's also, if you go to odyssey.com, you can download a PDF version of it if you don't want to, if you're okay with that, or you can buy the hard copy on Amazon. But it's a bestseller on there on Amazon. And so it helps people walk through that process. If you're like, I'd like to learn a little bit more, that's a great place to start as well.
Yeah. And we'll, if you don't understand how to spell it or whatever, we'll put the link below this video for you to look that around. But so something that I just thought of, we're talking, I've got about 2,000 people in my group, and many times they'll ask me about, hey, they're physicians or dentists or other high income earners who ask me about, hey, real estate professional status. And I'll listen to what they're doing or whatever. And it's just like, man, that would be tough.
Yeah.
That would be tough. I'm not saying you can't do it. That'd be tough. But those same people typically have a non-working spouse or somebody that works part-time. So what you're talking about would be perfect for that person. You got somebody making $300,000, $400,000, $500,000 a year. Their spouse doesn't work much. Well, he or she could be the one that kind of is a little more involved in this. And then again, they could use a loophole if they wanted to lower the taxes. So I think that'd be a great situation.
Absolutely. And you don't have to, it's a lot harder to qualify for real estate professional status than it is to materially participate in these properties. And so if you have another full-time job, you're not going to qualify for real estate professional status, because you can't do that and have something else that you do more of, right? That's one of the criteria. And so, but yeah, a spouse that maybe, somebody's spouse that has a little bit of extra time, they could materially participate in a property, which is actually easier than real estate professional status, and qualify both of you together, because it can be spouses and partners that do that.
Right, because I think it's 750 hours or more with the real estate professional status, and then more than half of your time actively participated in the real estate business. So that's really tough for
Yeah,
people to do. But again, what you're talking about, and they're materially participating, maybe they're, they could say if they go on vacation and they're looking for
yeah.
property, I mean, that could qualify, right?
Absolutely. Once you start the process and you're taking it serious and saying, "Hey, listen, I'm, and that's what we like, even at Odyssey, you have like when they invest in like coaching or programs or things that they're following, it's like, okay, I'm actively really getting into this game. Now, all of a sudden, some of those vacations that they're going on and they're actively looking at properties and they're going and making offers and doing those things, all of those hours start to add up and start to count.
Yeah.
And material participation, there's a couple ways to qualify, but that's only 500 hours is kind of the gold standard, and then there's other ways to do less hours than that, but it's not even the same as like a real estate professional where you mentioned the 750.
Yeah. So on kind of a closing note for the high income earner out there paying a lot of taxes, maybe really stressed out, stuff like that, do you have anything else that you could share with them that could potentially help them in this journey?
Yeah. One, I would say, like, I'm a fan of all real estate. I think real estate is by far and away the best vehicle to build passive income. So if you're in that situation where like, hey, I'm a high income earner, I have the ability to buy something, invest in something. I'm a huge fan of real estate. I'm not saying that there's not other investments, but there's a lot of tax advantages in real estate. Pick an asset class that resonates with you. I particularly love short-term rentals. They resonate really well with us. We have a lot of fun with them, and they have a lot of really great advantages. But the biggest thing I would say is, pick something and do something with it, because these things take time. You got to be a long-term thinker. And most people don't think, they think, oh, if I can't do it in, the next 3 or 4 months, maybe I'll just put it off. A lot can happen in a year, and a real lot can happen in 3 to 5 years. Right. And so start, if you're in that situation, put yourself in a position that looking back a year from now, 3 years from now, 5 years from now, you're like, man, I'm really glad I started that journey, whether it's short-term rentals or anything else that you choose. Like I said, I'm a big believer in real estate being the best vehicles out there, but pick an asset class that resonates, and short-term rentals can really accelerate that progress as they continue to grow and continue to become as popular as they become for the end user as far as traveling accommodations.
Yeah. And to kind of close on your point, when I talk to people, sometimes they'll know a lot about real estate. I mean, a lot. And I'll ask them how many properties that they're in or whatever, and they say none, because they have the analysis paralysis. And I was like, look, 10 years from now, I'm going to have, X amount of properties, and you're still going to be doing the same thing, just scared to death. I mean, so, it's kind of like when you get out of dental school or medical school or whatever, you learn all this stuff, but you got to get to the point where take your knowledge, you got to start treating patients.
Absolutely.
I mean, you got to start somewhere, right?
Right.
So,
one thing I heard a long time ago, I don't even remember who said it, but they said that the amount of, when you take really successful people and you look at them, what's the difference? One of the major differences between really successful people and just average people is really successful people, if you look at the amount of information they need before they move forward and make a decision, is a lot less than average people act like they need, right? Successful people are willing to look at information and able to move forward with, one time I heard somebody at the same time, they said, at best, you're going to know 80% of something before you move forward. Most of the time you're operating on 20 to 40% of the information before you can move forward. Successful people are okay with that. They're going to make, they want information. They want to make, but you have to realize that the people who sit on the sidelines that you said that know all this stuff about real estate, they know 90% of what they need to know, but they're waiting for that last 10%. Well, that last 10% might not come, because guess what? Most of the time, really probably the last 30 or 40% comes from experience. It comes from being in the game. You're not going to learn it unless you're in the game. Right. And so the successful people, they need less information before they move forward. And that's one of the biggest differences between successful and average people, is the amount of information they need before they move forward on something. So I always remembered that. I always think about it. And when I look at really successful people, it feels very true to form when I talk to them and how they make decisions and what they do to move forward, because that's what they do. They move forward. If it doesn't work, they pivot, they make adjustments, and they keep moving forward.
Yeah. So, I always tell people, whatever you like to do, if you like to read books, if you like to podcasts, YouTube videos, join mastermind groups or whatever, but at some point you've got to bite the bullet and jump in, which I think having a group, having a community of people to bounce stuff off of, see their experience, that really, to me, that really helps, accelerate. So, if I had the choice of, okay, take short-term rentals, okay, I could go online and I may have to spend a year or two learning what, but I could do it versus paying somebody to just shortcut that.
Yeah.
Then I could start making the revenue. Look how much further I'd be ahead.
Absolutely.
If I did that. And if you could start thinking in those terms, it's kind of like, are you going to go clean your house for 5 hours? Or it's got to be what your time's worth, or pay somebody to do it. And you go, it's just a way that you value your time. Some people don't value their time, but
no. But even if you don't value your time, do you value the time lost in an opportunity that takes a lot of time to mature, right? If an asset's going to take a certain amount of time to mature, getting started a year sooner is a hell of a lot more beneficial than waiting that year. Even if you don't value the time you're spending, the value in that asset to have that extra year of maturity is huge.
That's true. Best time to start with something is today.
Yep, absolutely.
But Shawn, thanks again, guys. I will put the link to what we talked about below the video. Reach out to Shawn and his group. He can help you get ready going in the short-term rental space. Thanks again, Shawn.
Thanks, Jeff. Appreciate it.